Hey guys, good afternoon and welcome to MF Corner. I'm Pavitra, with me is Sonal, and today we are going to be talking about a very hot topic. The entire IPO craze over the last few months has been absolutely non-stop. We've seen big retail interest and even bigger listings in many names. So today we're going to speak to a team and a fund, two fund managers who actually look at a fund which is dedicated to recent listings and all of the upcoming IPOs as well. We have Bharat Lahoti as well as Bhavesh Jain with us. Gentlemen, thank you very much for coming down to our studios. It's always nice to have a chat in person, and I'm sure this fund has seen huge interest, right, over the past few months. Like I was mentioning, it's a good way for retail to, really get in and hold some of these recent listings. So, Sonal, I'm very interested to learn how they pick, because there are so many, right? So you have to select from that, how they're looking at valuations as well.
Because it seems like every IPO has been doing well. So thank you, gentlemen, so much for joining us. But Bhavesh, let me come to you, because the recently listed IPO fund, it's a very interesting space, and we've been talking about how every retailer is interested as well there, right? Give us a sense of what have the flows looked like in your particular fund. How much interest have you garnered here?
See, if you see, IPO is cyclical in nature. When market becomes extremely bullish, we see a lot of investors suddenly develop interest for upcoming IPOs. And the way listing has been happening for last, you can say, couple of months, craze has definitely gone up on the IPO side, and that is quite visible on the number of oversubscription we are seeing it. But as far as our fund is concerned, we are not here for listing day gain. And that's why, if you will see, this is the second time where we have, you can say, restricted lump sum investment in our fund. The last time in 2021, second half, when this was similar craze in IPO, we got almost 140% jump in our AUM. And then for next couple of years, because there was a lull in IPO, investor didn't make good amount of money. And looking at that same experience, we have tried to avoid that mistake this time. And upfront, we have stopped restriction in this fund. So we are not seeing huge inflow coming into our fund because of the restriction. But yes, overall, we are seeing a very good interest in IPO as a space.
Oh, absolutely. Bharat, 2024 is also packed with IPOs, right? 80 DRHPs have already been filed. I think 14 in this quarter itself. So take us through how you're reading the valuations, of some of these companies, and also which pockets do you think pose interesting opportunities? Are there certain sectors that you feel are better positioned right now?
So 2024 has started with a very good note in terms of number of IPOs. If you look at it, there are 26 IPOs which have already been approved by SEBI, which are going to raise close to around 26,000 crores of money kind of stuff. And then another 40 F2 IPOs which are there in the pipeline to that extent, which are expected to raise around 47,000 crores. So the IPO market is a bit hot into that context. But if you look at it, IPO, there would be a good 2 months period, after which there would be a lull period, because we are going to run up for an election period. So there would be 2 good months where we will see a lot of IPOs coming up, and then there would be lull. Later on, you would see actually IPO picking up. Now, valuation is a case where it's an ongoing discussion with the management to that extent. And you would see in last 1 year, the institutional investor has bargained very hard. If you look at it, last 57 IPOs which came in, 50% of the IPOs which with their market cap more than 5,000 crores have been actually priced at a 50% discount to the existing peers to the extent. So people have bargained very hard during this time, and consequently you are seeing a lot of listing day gain happening and many of the follow-ups to that extent. If you look at the pockets where the IPOs are going to come at, these are IPOs coming in manufacturing space, especially autos, defense, and some of the cap goods space. We are seeing interesting ideas. We are also seeing some interesting ideas in consumer space, because that is the space where India is actually pushing up a lot of the consumer discretionary space, which is exciting. So I think a lot of money can be made in many of these companies which are going to list.
So, you spoke about interestingly that they're trying to leave some value on the table, and that's what everyone's grabbing on as well. But that did create most of them becoming very cautious on the broader markets as well, because we've seen the mid-caps, small caps rally so much, phenomenal listing day gains as well. In that case, what does this normally do to, say, mid-cap and small cap IPOs? Do you think now they will be priced at a low, even further low valuation than what you said? And will we be seeing lower subscriptions in the coming months?
So 2 things. IPOs is generally mid-caps and small caps, because that's how the company starts off, and then it gradually graduates itself to a larger cap company kind of stuff. So the behavioral pattern for the first few years would be like a mid-cap and small cap fund, whether it's on a listing, valuation, and post-listing, how the stock behaves. So that's going to be the case kind of stuff. If you look at it in terms of subscription numbers, given the new SEBI regulations for T+3 listing for IPOs, actually many of these hedge funds and the proprietors have actually been extremely active in the IPO space. And this has resulted in huge subscription numbers which are coming in the market right now, if you look at it. And which has resulted high liquidity in the IPO market, very difficult to get allocation for retail investors, and it's very difficult to actually get an access to IPO market despite knowing the fact that their companies are good enough to that extent.
Oh, absolutely. I take that point. And, you know, this is something that we get so many queries on where there are investors trying to invest and just not getting allotment for any of them because they're so oversubscribed. Bhavesh, you know, we were talking about this earlier where a lot of people try to get in with just that making the listing gains profit kind of situation. You said you don't do that, of course. But take us through, you know, what some retail investors might be missing out on because of this, just because of the fact that they're not staying invested long enough.
Yes, I think retail investors normally face three problems, which we normally term it internally as 3S. So it is about getting, you can say, access to a right IPO, then it is about selection, and then it is about scalability. You will see a good IPO gets so much oversubscription that retail people hardly get any access to this. Then after that, selection is a big challenge because each and every IPO doesn't make money. Now looking at some of the very good listing gain, retail gets involved into IPO and then they end up getting some of the bad IPOs which doesn't create any wealth for them, and then they get stuck with those IPOs. So that's why the fund is trying to, you can say, solve this problem by following a process-driven approach to select stocks, wherein we want to make sure that people understand that IPO is not about listing the gain. There is a lot of earning momentum which is there behind the companies which are coming up with IPO, and that earning momentum will be realized over next, you can say, 1 year, 2 year, 3 year. And for that, you have to stay invested for 3 years. If you look at our fund, it has completed almost 5.5 years. The CAGR return for this last 5.5 year will be close to 15% CAGR. If you ask me how much out of that 15 is listing the gain, it will be less than 1%. But people just talk about listing the gain when it comes to IPO, but the real wealth is created after, you can say, listing. So there are many examples where IPO stocks got listed at 100% premium. People thought it is very good that we are making 100% return in one day. And after that, that stock in next couple of years or 3 years has become 10x and 15x. So that is the kind of potential we have in these stocks, and that is the problem we want to solve.
And that's exactly what you're trying to do with the fund. But can you give us some more idea about what your investing approach is like? You look at a new company, how do you decide that this is the one that I'm going to invest in?
So the IPO process, if you look at it, starts when the company files for DRHP. So we start the research process when the company files a DRHP. What we do is 3-4 things we don't do as such. One is that we don't go for a pre-IPO deal kind of stuff because it is an illiquid environment. We don't want to get into it. We don't do any SME IPOs because that is high chances of being a manipulative IPO to that extent. So we don't do any SME IPOs. We also don't do any cash calls kind of stuff. So we are fully deployed to that extent. And finally, when we look at it, the IPO stock, what we do look at 2 qualities of companies. One is quality has to be there, and secondly, growth. We are not looking value primarily in the IPO space. If you look at from India perspective, India is more about growth story, and the idea is to pick up some of these growth story to participate in India's journey to 3-5 trillion, 5 trillion, 6 trillion economy. So this space is from that perspective. The IPO process starts when the DRHP gets filed. You actually scan through the entire DRHP, try to get a sense of the history of the company, promoters, background, what they have done historically. Have they done any action which is different from corporate governance issues, and so on and so forth. Then you do a lot of financial analysis on the sector, companies, and it's an extremely bottom-up process in terms of each of the company has very different characteristics when they come for IPO. And finally, it ends up boiling up in terms of what valuation in this company looks interesting to that extent. So that's how we built out portfolio for our fund.
Okay, interesting. Bhavesh, you also come in on this. You know, is there a sort of checklist that you have that you would put every IPO to, you know, through just to make sure that it's kind of ticking all of those boxes? And you also come in on the SME IPOs because, you know, it's just not making sense what's going on some level because you have 15-16 crore IPOs, seeing 1,000 crore subscription, listing at 400%. I'm asking you because, you know, from a retail investor standpoint also, it's very difficult.
Yes, again, as I told you earlier also, IPO is not about listing day gain, and then people are getting so excited looking at huge listing day gain, particularly into SME space. I think 3 years down the line or 5 years down the line, many of these companies may or may not even exist, and that is the trap which we don't want our investor to get into. That's why we are extremely cautious on that side. And if you will see, even though we have a dedicated IPO fund, we have refrained touching any of the SME IPO. Some of the, you can say, qualities what we look while selecting or you can say analyzing any IPO is number one, obviously corporate governance, the track record of the management, what they have told earlier and what they have delivered, whether there is a, you can say, we try to cross-check what the management is trying to say, and then again what are peers in the industry or their competitors or their suppliers, whether they are in sync or not with each other. Then obviously relative valuation is the game for those sectors which are already there. Because again in IPO there is one more problem what we face is there is no relative valuation company. Like a first food delivery company is getting listed. Whom do we compare with? So in that case, we also take help of some of our brokers to take analysis of global peers also. So all these things help us to have a very right, you can say, way to select IPO, because as I told you, even today, 30% of the IPO which listed in last 8 years are still not even touched their IPO price. So that means all IPO doesn't make money. So right selection is very important, and that is where you will see the benchmark of our fund and us. If you'll see in our benchmark, all the IPOs are part of our benchmark. And whereas our fund have only selected IPOs, the gap between our benchmark and our performance is almost 8%. That is the alpha we have delivered by selecting right IPOs and more importantly, avoiding, you can say, some of the bad names.
If all of them had to do well, markets would have seen a different levels only, right? That's why it's a subjective market. All of it can't do so well. But it's a very interesting chat. We have to get into a quick commercial break. So stay tuned. On the other side, we'll continue our discussion with Bharat Lahoti and Bhavesh Jain on the IPOs rush and much more. Welcome back. You're still tuned into MF Corner. We still have with us Bharat Lahoti and Bhavesh Jain of Edelweiss Mutual Fund. We are talking about IPO Rush, their new IPO fund, and generally the markets as well from the mutual fund perspective. Well, you know, we have spoken, gentlemen, about what is the constituent of the fund. How do you look at going on selecting the companies in this fund? But tell us, Bharat, who is this fund best suited for? Who should actually look at going ahead and investing here? And what is the minimum horizon you would recommend to them?
So this fund, if you look at it from a perspective, this fund is a vehicle for actually participating in some of the recent listing. It's a thematic fund where we invest in last 100 IPOs. We try to select 30 to 40. So this fund is about investing in some of the high growing IPO companies to that extent. Second important thing is this fund actually gives a huge diversification base benefit because the mid caps and small cap in this fund is altogether different from any other mid cap and small cap fund. Third important benefit what you get is these companies are actually being potential entrants to many of the indexes because these are passive funds will pick up after 6 months, 8 months of these time they will. So you get an early access to many of these ideas. Hence this fund is interesting. If you look from a retail perspective, there are 3 advantages what you get. One is the selection, which how do you select IPOs? Second is about subscription because access becomes very difficult to how do you get an access? And third is post-listing days, is how do you sustain many of these returns in our portfolio? So this fund is to get the benefit of these 3 for the retail investors. For us, we think this fund is suitable from a perspective of 3 to 5 years. And most investors what we are talking to is come through an SIP route because we don't deploy fund on day one. Whenever the IPO comes, we deploy across time period as soon as companies start delivering numbers to that extent. So we say that come in this fund through an SIP route.
Okay, got that. That's very helpful for any investor that's looking to get in. The other space I want to talk about is this entire balanced advantage category, right? I remember in that COVID period, it had sort of just taken off, right? When everyone wanted some kind of mix of debt and equity, we saw quite a lull after that. Yesterday, the data came out, and once again, it's almost doubled. Do you think the hybrid space and balanced advantage in particular is likely to really get a lot more money from here on?
Yes, definitely. What happened in last 8 to 12 months is market has been one-way rally in a single direction, and that's why people forgot about volatility. Now, as we move closer to election, budget, all this event, definitely volatility will come back. After a rally of almost, you can say 40% from bottom in say less than 8 months, definitely some volatility will come in, and that is the real time where hybrid funds, particularly balanced advantage fund, makes a lot of sense. Same thing experience was there at the time of COVID when market corrected and we saw sharp fall because of COVID and lockdown and all that stuff. People started coming into balanced advantage as a category. People realized that in equity, it is not only like traditional market where you just buy and hold forever. You have to manage your allocation dynamically, and that's why asset allocation is really very important. And this is a single fund which tried to achieve all this objective without, you can say something very complex. a simple product trying to solve a lot of your needs, and that is where balanced advantage fund comes.
So, just follow up on that, because the Edelweiss Balanced Advantage Fund right now has a huge equity tilt. We understand that because equity markets did well, but now we are talking about rate cuts possibility in 2024. Do you think the tilt will change now?
See, the whole purpose of coming into a fund like balanced advantage fund is we want to remove this human emotions out of your asset allocation decision. Right now, people are worried about valuation, people are worried about election, people are worried about budget, and so on and so forth. But, and as a result, a lot of people have missed this rally completely. Because we follow a trend-based approach, which is a model-driven approach where we look underlying trend of the market. The model which we follow is Edelweiss Equity Health Index. That model is on the basis of market trend and market volatility, help us to decide how much equity we have to carry on a day-to-day basis. So it is not that I am bullish or he is bullish and that's why we are carrying high equity. It is the model which is again a function of trend and volatility of market, which is guiding us to take higher equity exposure. Though people are worried about valuation, but we are trend follower and we see trend as of now is extremely strong and positive. And that's why we are keeping higher equity allocation. But that doesn't mean it will not change. A couple of days of fall, a change in trend, a higher volatility, and automatically our equity allocation will go down. So it is purely model driven, and we allocate on the day-to-day basis, looking at the signal thrown by our model.
That's the beauty of this kind of fund, right? That your fund manager is at complete ease to sort of change that whenever he feels like maybe the market conditions are changing. Bhavesh, who would you think that this kind of fund is best suited to, and would you, what kind of sort of investment horizon would you recommend? Because this also can have a huge equity tilt, like we spoke.
Definitely. And then I think that's why internally we call it as an all-weather equity product. That means it is suitable to each and every investor. Earlier, people used to think that balanced advantage fund is just a tactical allocation. When volatility is high or someone who is coming for the first time, this is a fund for only those set of investors. But now I think we have enough data, almost last 10-15 years since the existence of balanced advantage fund as a category. And the category has shown both from return profile as well as volatility profile that it is no longer a tactical allocation. In fact, it should be part of each and every client's core portfolio. Say, for example, a fresher coming into equity for the first time. You cannot put him directly into mid-cap or small cap or even an IPO fund because it will be extremely volatile. So he can come into a category like balanced advantage fund, get used to it, get used to market volatility for a couple of years, and then he can move into small cap, mid-cap and other asset classes also. Similarly, someone who is retired and he wants a regular cash flow, normally he put money into FD and every quarter or every month he gets some interest. Even that kind of investor can come into balanced advantage fund where he can start with 6%, 7% SWP and get regular cash flow, wherein his return will be slightly better than what he would earn in his normal FD or you can say other fixed income product. Similarly, someone who is worried about valuation, someone who wants to book profit can definitely book profit in your traditional mid-cap, small-cap fund and come into balanced advantage fund. Effectively, what we try to do in balanced advantage fund is it can be an alternative to your traditional long-only products, which are tilted towards large cap, wherein you will get better risk-adjusted return. Returns may be lower, but adjusting for the risk, your volatility is 50% lower compared to your traditional long-only fund, and your returns are almost 80 to 90% same. So on the risk-adjusted basis, you are getting very good product in case of balanced advantage fund. Similarly, after this debt taxation change, a lot of people are trying to find out alternative where they should park their 3-year, 5-year debt money because indexation benefit is no longer available. So I think those set of investor can also come into balanced advantage fund where they will get returns which will be, you can say, slightly higher than what they get in debt, but obviously with slightly higher volatility also. But for that higher volatility, the returns which they will make is more than enough to compensate that for that volatility. So even a fixed income investor, even your long only investor, even your as I told you, a retired person, a fresher, this is a product suitable to all set of investors. But yes, the only caveat is you have to stay invested at least for 3 to 5 years because again, finally it is an equity fund. And for any equity fund, the minimum investment period is 3 to 5 years.
Oh yes, that makes sense. And you speak about debt taxation. When this did come by, everyone was like, we should look at hybrid funds, we should look at balanced advantage funds. That was the idea because that immediate reaction does that to investors, right? But as you said, you have to be patient, be there for 3 to 5 years to ensure that you get all the returns that you expect from a fund. But gentlemen, it has been such a pleasure to have both of you on the show today to explain everything with respect to your IPO fund and otherwise in the mutual fund investing arena as well. Thanks a lot for joining us today.
Thank you.
Thank you.
Okay, all right. With that, we'll take your leave on this edition of MF Corner, but stay tuned for closing bell to take you through the last hour of trade.